Let's talk about quarterly estimated taxes. If you didn't know, we have our quarter two taxes due June 16th. So that's not that far from now. And I'm just wondering if you guys have made your payments yet. I know it is very daunting. I'm not going to lie, it's very daunting. But I have here a shortcut that I'm going to show you. This is a really great method to calculate your quarterly estimated taxes, and it's not perfect, but it's better than not paying anything to the IRS. This is going to be helpful, especially if you just got started with your private practice. This is your first year being self-employed. You have no idea how much you're going to owe in taxes, and you don't have anything to base it off of. Before we get started though, let me introduce myself. My name is Jeanette Andrada, and I help therapists in private practice save the most in taxes using tax and accounting strategies. So I'm here to give you all the information that you need in order for you to make the best decisions for your business when it comes to taxes and bookkeeping. Let's go ahead and move over to my laptop. I think it's a little bit easier to record than on my phone. So let me get over there and I'll be right back. At this point, you might be wondering, okay, what am I talking about? What could we use or what could I do to pay my estimates? Well, before we get to that, I do want to give you just a quick overview of what quarterly estimates are. That way we understand what we're doing, we understand what we're paying for. I'm currently working on a course where I want to go a lot deeper into quarterly estimates, but I'm just going to share a lot of this here with you because it's information that's really important and you should know. So one of the things I did want to bring up is who should pay quarterly estimated taxes. And if you are self-employed or an S Corp shareholder or a corporation, payments are not required if less than $1,000 are owed after your withholdings and your credits and all the payments that you've made. Next, what are the consequences of not paying quarterly estimated taxes? This is the one that people overlook, and you end up paying penalties and interest. Penalties and interest, for underpaying are getting high. So right now, as you can see, we're at 8% and this is the highest that it's been since 2007. So let's go look at this. We have our non-corporate rates are at 7% right now. So that goes up and down. Just keeping in mind that when you're not paying these estimates every quarter, you're going to be accruing interest on that. Here's an example of your estimated tax penalty for one of my clients that didn't pay. Here's another one for almost $1,000. So that adds up. This is what we came here for, right? How much should be paid every quarter? I have three payment methods. One is called the safe harbor method, which is the IRS method. The next one, which is my shortcut, is the fixed percentage method. And then finally, we have the tax projection method, which is more advanced. And this is if you want to get very precise and not owe anything at the end of the year. Well, I'm not going to go over the safe harbor method, but I am going to go over the fixed percentage method because this is going to be your shortcut, and these helps you minimize your penalties and interest. Well, it's simple. This is the easiest method. What you want to do is you want to set aside 20% of your income as it comes in. And what you will need are your bank statements or access to your transactions, and or you need bank access to make bank transfers. I recommend you're going to have multiple bank accounts, and I recommend this method because out of sight, out of mind. So what I personally do is I have my own business tax account that I set aside every 2 weeks, and I don't even look at it. I don't think about it. A lot of my clients do the same exact thing. Now, I just move over a certain percentage, and this percentage might change, but a good rule of thumb is going to be 20 to 30% for if you're, for your state also. If you like me lives in a income tax or a state that doesn't have income taxes like Texas, then you might not need to set aside up to 30%, but if you're like in California, for example, definitely increase it. And what you will need to do is that you're going to go through all those transactions and everything that you made for that whatever that period is going to be, whether it would be every month, every 2 weeks, like me, or you just do it every quarter where you gather all this information at once. So what you want to do is you are going to, like let's say every 2 weeks, and you're going to transfer over some of that income, like 25% of it, into your tax savings account. You're not even going to touch it. You might not need to do this method if you're just going to pay the IRS directly, if you're good at saving that money. I just prefer setting aside that money throughout the quarter so you don't spend it, you don't count on it or anything like that. There are some pros and cons. The pros, of course, is that it's quick and easy. It's a shortcut. And also, you might be setting aside, or you will be setting aside for a couple of months, so your funds will be available in case of emergency. If you have something that comes up and push comes to shove, you have that money available. The cons is that it doesn't take other income or business expenses into consideration, so you might be overpaying. When you pay uh, when you pay taxes on self-employment income, you're not paying on the cash that you receive, right? Or the money that's deposited to your bank account. You're paying taxes on your profit, which is what you received minus your business expenses. So that bottom line number is what you're paying taxes on. So if you're saving 20 to 30% and you're paying that to the IRS or, to the state, you might be overpaying. You also might have other things going on your personal tax returns that affect your business, your sole proprietorship tax returns. So that's going to change. Well, what I recommend, rather than you just getting overwhelmed and not paying anything, what I recommend instead is to take this method. If it's your first year, especially, and you don't know what to expect, just do this method for the first year. Once you get your tax returns done for the first time, work with the tax preparer that's going to give you this information, or make sure your tax software will give you that information. That's going to make it a lot easier for you in the future. All right. Thanks, guys. Thank you so much for joining me. I will talk to you next time.